again, you're just not actually buying Bitcoin. You don't get the sovereignty benefits of being able to actually control that money in the way that Bitcoin was built to be able to do.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, and today I'm joined by Trey Sellers from Unchained. Welcome, Trey. How are you?
I'm doing great. Thanks for having me. I was really looking forward to this.
Yeah, of course. We're happy to have you. We've got lots to talk about, but first I want to kind of hear, kind of your background story, your journey into this Bitcoin world, and hear about Unchained and what you do there and what Unchained does.
I've been at Unchained a little over 4 years, and I came from a traditional finance background in banking. I was previously working for Truist in the capital markets business. I sat on the trading floor, was doing like risk and P&L and sitting in between trade flows, front row seat to all of the shenanigans of the fiat world, of course. And I think my Bitcoin journey kind of started way back in like 2011. That's when I first heard about it. I was working at Goldman Sachs at the time. And I have this vivid memory of being in the gym at the Goldman Sachs building in Jersey City and listening to Free Talk Live, which you may be familiar with that.
Yeah.
And they were talking about Bitcoin. I was like, oh, that's cool. It's libertarian money. Like I jive with that, right? But I didn't do anything about that, unfortunately. Fast forward to maybe 2014 is when I first bought a little bit of Bitcoin. But I still didn't know what I was buying. It was finally easy to buy it. You could just kind of connect your bank account to Coinbase and start purchasing some. So I was doing a little bit then, but it wasn't until maybe 2017, 2018, 2019, like that time frame where I think I found the right people. I found the Nakamoto Institute stuff and some of your writings, and for whatever reason, the algorithm at the time put the right people and the right topics in front of me. And then from there, I just became extremely convicted, and the rest is history there. So I became the Bitcoin guy at the bank in like 2020, 2021, and I was giving presentations around. I called it Bitcoin for Bankers, just trying to help them understand what the landscape looked like, what the market actually looks like what is Bitcoin in a way that they would understand, in language that they would understand. And then I was asked to join a crypto working group as the Bitcoin subject matter expert in 2021. The board of the bank was putting together this kind of just like an exploratory panel, right? They just wanted to understand what the landscape looked like. So that was a nice honor to be able to help these senior executives understand Bitcoin and all that. And then the opportunity at Unchained came up, and I couldn't refuse to do that, to jump into the Bitcoin world. Work with Parker Lewis and Joe and Drew at Unchained to build something that's truly great, and I think has matured into a premier financial institution for Bitcoiners that operates very much at the base layer of what Bitcoin does. We're very much focused on making sure people have direct control over real Bitcoin, doing so in a way that's very fault tolerant, so that high net worth individuals and people with large Bitcoin balances are very comfortable holding those large Bitcoin balances and not feeling like they can't do it, because there's a collaborative manner here. We provide really great service, and then a suite of financial services that are built around that to give them the types of things that they need to manage that Bitcoin position over time, over generations, succession planning, financial planning, and that kind of thing. So it's really a kind of a comprehensive suite of financial tools for Bitcoiners, built by Bitcoiners, and operating at that base layer.
So there's some Bitcoiners that are perfectly comfortable holding their own keys. Others have a little more anxiety around it. Like, where do you think that anxiety comes from, and kind of that, the emotions around it?
I mean, it's scary at first, right? Because it's very foreign. I can remember back to the days of me first taking that Bitcoin off of Coinbase, first to a mobile wallet, and just like, I'm pulling out very small amounts, maybe $100 worth of Bitcoin or something. And I remember my heart like kind of pounding, because I just didn't know what was happening under the hood. And it's like, is this thing going to arrive? Oh, I see the transaction, but is it going to actually confirm? Like, what is going on here? And but that kind of starts the exploratory phase of understanding exactly how Bitcoin works. And over time, as you have more touch points, it becomes very easy to feel confident in using Bitcoin and controlling it directly. So like we focus a lot on a very consultative way of engaging with our clients and giving them the types of educational tools, conversations, high touch, points of interaction so that they don't feel like they're having to figure out all of that stuff on their own, and that they can feel comfortable and confident that they're securing those keys in the proper way. And there are best practices that have come up over the course of the years as Bitcoin has matured, as people have started to develop really great ways of holding large amounts of Bitcoin and doing it in a way that's fault tolerant, that has succession planning in mind, and that can give people the peace of mind that they're not going to just make one mistake and lose their Bitcoin.
Right, because there's those news articles of this guy threw away his hard drive and it has like X thousand Bitcoins on it. And it's a lot like flying an airplane. Like if you make the wrong decision, there's irreversible consequences. So how does Unchained, like in practice, make that journey maybe a little less anxiety ridden?
Yeah. Well, first of all, the way that our clients are holding Bitcoin is using private keys and hardware wallets and all of that, but we're using multi-signature, which is functionality that's built into Bitcoin. And we do this in what we call a collaborative custody manner. So 3 keys actually protect the Bitcoin all at the same time. And any 2 out of the 3 of those are needed to move Bitcoin out of this vault that we help them create once it goes in. This is functionality that's built into Bitcoin, right? So this is not proprietary. We're just leveraging that functionality so that our clients can have this fault-tolerant way of securing Bitcoin. We hold that 3rd key alongside them so that they retain full unilateral control over the Bitcoin, but that we're in a position to help them recover if something were to happen to one of those 2, or very importantly, if something happens to them, we're in a position to help with the transfer of the Bitcoin in accordance with their estate plan so that their successors, their heirs, can actually get access to it. A lot of people very much value self-custody, and they should. There are trade-offs to everything, of course. And if you are holding a large amount of Bitcoin with a single hardware wallet that's in your sock drawer, the only way to really deal with succession planning in that scenario is to write down a treasure map of some kind. And you have to kind of fully trust the people that you are wanting to manage that process for you, because there's a single point of failure in that. They could make a mistake and lose a copy of a seed phrase that you've given them, or a bad actor could get a hold of it or whatever. You need to be thinking about Bitcoin custody in a very fault-tolerant way and building in a reduction of any single points of failure. And that's how institutions and corporations think about this as well, right? They may or may not be actually holding keys directly, but they're always thinking about how can you eliminate that tail risk of catastrophic loss and drastically reduce the counterparty risk that you've got. Here, we just take that into account with the actual direct control for our clients.
And so for folks out there who they might hear this and they think, well, I'm just going to go buy a Bitcoin ETF and that'll just make my life easy. Like, how do you position and how do you assess the risks of that versus using collaborative custody with hardware wallets?
Yeah, I mean, you're buying something that's fundamentally different. You're buying shares in a fund. That fund, owns Bitcoin on your behalf, and you're paying a fee to do that. I think the average fee for the Bitcoin ETFs right now is somewhere in the 20 to 25 basis points range. That gets very expensive over time, so that's one thing, right? There's a cost component that you need to consider. And again, you're just not actually buying Bitcoin. This is very similar to buying the GLD gold ETF. You're not actually buying gold. You don't get the sovereignty benefits of being able to actually control that money in the way that Bitcoin was built to be able to do. But there are trade-offs to everything, as we were saying. Yep. There's a spectrum of the way that people want to manage their wealth. There's a spectrum to the way that people understand Bitcoin and want to take advantage of those benefits that you get from holding the actual asset. And so, everybody has to kind of come to their own conclusion as to where along that spectrum they have their understanding laying down, and perhaps there's a spectrum of allocation that they're actually doing as well. And I'll end on this for this particular question, which is that I see a lot of people come into Unchained and they say, Trey, I've got a very large position in Bitcoin through the Bitcoin ETF. But now I've like done the work to understand why I want to hold actual Bitcoin, and I need you to help me with that.
Yeah.
And so that's where that journey kind of takes the next step down the path of holding the actual asset.
They need in-kind redemptions, right? To really fully bridge that.
I would love nothing more than for the ETFs at the retail level to be able to
send it to a Bitcoin address.
Send it to a Bitcoin address, exactly. And you know,
it seems inevitable, right? And vice versa too.
I don't think so.
You don't think so?
You think so? Really?
Yeah.
I see that as something that is available for institutions.
Yeah.
I don't really see them making that available. Maybe this is a pessimistic view. I like to be an optimist, but you know.
Well. So let me make the case for that, okay? Which is that they want to gather assets as well, and in past roles at past companies I've been in, I've heard these debates about. How do you gate withdrawals? How do you charge a lot of money for withdrawals? And the reality is that a lot of customers, they want to know that they have the freedom to exit, and that'll actually make them more likely to enter and to leave their assets there.
Having that optionality is a huge reason to not buy the ETF, at least at this point in time, right? It's like if you're not ready to take control of your keys, understand that, right? Like I get that. Yeah. Find a custodian that you do actually trust that will allow for that withdrawal mechanism, so that when you're ready, when you've done that extra intellectual work, when you've talked to the Unchained team and understand exactly how this can work for you, so that you can get the sovereignty benefits as well as the number go up benefits that Bitcoin provides, you'll have that option available to you. So like that's the way that I think about it, and the way that I talk to potential clients and clients about what that allocation could look like.
Isn't there a tax implication as well? Like if you buy the ETF, it goes up in value, and then you want to get real Bitcoin, you sell the ETF, you buy the real Bitcoin, you've got a capital gains tax on that, or is that a wash?
Absolutely, right? Unless it's done in a retirement account.
Okay.
Unchained has IRAs. And so we do have a lot of clients who come to us and say, I bought the ETF in my IRA at traditional company A, and I want real Bitcoin in there. And that's something that Unchained does. And so there is this process of having to sell the Bitcoin or the Bitcoin ETFs for cash, transferring it over there. It takes a little bit of time to do that when you're dealing with the traditional financial system. But they have the ability to roll those or transfer those assets from a traditional firm IRA into an Unchained IRA and hold the keys to the Bitcoin in that same collaborative custody manner. If you're not doing it in a retirement account, there is that tax implication, right? If Bitcoin has gone up, you've got a capital gains that you need to kind of account for when you are transferring from the ETFs into real Bitcoin.
Yeah, and I've talked with a lot of Bitcoiners, and they're like, they do both. They've got real Bitcoin, they've got ETF, they've got and for them it's kind of like just covering all their bases. So that's a really interesting. So how did Unchained start? Kind of what's the origin story, and what's kind of been the journey to where it is today?
Yeah, Unchained started back in late 2016 and call it early 2017 with the launch of the initial product, which was a Bitcoin-backed loan. And the founders, Joe and Drew, kind of realized that over time, this was first of all, a very popular product. People want to get liquidity from the Bitcoin that they hold without having to sell it and take that tax hit and all that. And they want to maintain exposure over a long period of time to the asset while still being able to use it to be able to fund their lifestyles, right? And so they launched these loans and then realized that, hey, the collateral security on what you're using to collateralize these loans is actually very important, and Bitcoiners care about that. And so this collaborative custody model was a great way to allow our clients to actually participate in the custody of the Bitcoin and keep them as close to the Bitcoin as humanly possible in this type of loan scenario, so that they can verify that the Bitcoin hasn't been moved or commingled. It's not some kind of like black box situation where you give your Bitcoin to some random crypto company or whatever, and you have no idea what they're doing with it, which caused a lot of problems a few years ago. And so that loan product, very popular, grew quite a bit. And then we realized, well, this custody model works really well for people who just want to hold Bitcoin as well. And so that's kind of the birth of the Vault, where it is that true self-custody model in a collaborative manner with Unchained holding that third key. And then the natural outgrowth of doing that is that people want to be able to buy and sell Bitcoin and make that easy within the platform. They want different account types, right? So we have personal accounts, trust accounts, business accounts, IRA accounts, as I mentioned. And we've got these commercial Bitcoin-backed loans. We don't operate in the consumer loan business these days, but if you've got an entity like an LLC or some other type of operating business in a business account with us, you can access that liquidity for making investments or business purposes as well. So this comprehensive suite of financial services is really what Bitcoiners are after when they think about this long-term asset, long duration asset that they want to be able to pass on to future generations, but they need to make sure that they're doing it in the right way from a custody standpoint and can be able to get access to the other financial services that they want to be able to do.
So on the Bitcoin-backed lending, you mentioned that there's this risk of you send the Bitcoin to the lender, right, and then they lend you the dollars. Let's say it's like 50% LTV or something.
Yep.
Fast forward a year, you pay off the loan, and the Bitcoin might not be there because they went and did some other shenanigans. They lent it out or something.
They lent it to a short seller,
right,
on the exchange or whatever, right?
Yeah,
and the Bitcoin's not actually there.
To earn some yield or something, and then we've seen that fall apart a few times.
Yeah.
And so Unchained doesn't do that by using Multi-Sig.
Well, within the loan agreement, there is no rehypothecation.
Okay.
You can verify that the Bitcoin is actually where you expect it to be from the fact that we're using this collaborative custody model and you hold a key. So it's not even that you have to trust us like, hey, here's your Bitcoin, you can see it in this address somewhere. It's that you can actually cryptographically verify that you're participating in the custody of that Bitcoin. Now, you only hold one key out of the three. So you can't, obviously it wouldn't make sense for you.
Because the lender would be worried about you taking the Bitcoin and then they're left high and dry without the collateral.
Right, exactly. But what the benefit that you get is knowing that that Bitcoin is segregated, is there where we say it is, that hasn't been moved, like I said, hasn't been commingled with other people's Bitcoin. And according to the loan agreement, there is no rehypothecation. We're not taking that Bitcoin and then placing it with a custodian, which is kind of a soft rehypothecation in and of itself. And you can't see where that Bitcoin actually sits at that point in time. And there's various ways that people, other lenders provide some assurances to their clients to help them feel more comfortable with the security of the Bitcoin. But the further away that Bitcoin is from you and your direct control, the more risk is involved in entering into that loan contract, right? And so, as I said, our goal is to keep our clients as close to their collateral as possible in this loan perspective, and then obviously all of these other tools work together very nicely and very well to give you that full suite of financial services.
In the space of lending, we've seen a lot of lenders go into like crypto lending, right? And then they're doing like Ethereum collateralized. Why has Unchained not gone in that direction?
Unchained used to provide Ethereum-backed loans, actually, very briefly and very early on. And there's a couple of reasons that we decided to move away from that. One is that it just made up a very small amount of the actual overall loan book. It was like less than 5%. And the other side of this is that there's a huge, like to do it in the way that we want to do things, keeping people close to their collateral, having this collaborative custody type model, it's extremely technically, operationally burdensome to be able to support multiple assets. Bitcoin has multi-signature built into it, as I was saying before, and it's a very clean way of doing this collaborative model when it comes to the custody. And so when you focus on just that from a technological perspective, the business side of this, the operational side of this becomes much more clean. And so, we've made the decision from a technical perspective to focus on Bitcoin because that allows our business to operate much more cleanly and to be fully focused on the security of the Bitcoin for our clients, which is typically speaking the majority of what people hold. Yeah. There's a philosophical reason that we do that as well, right? Like if you think about any endeavor, any type of like time or capital that you're going to commit, you want to make sure that that is being done to the highest and best use. And we look at the broader crypto market and see Bitcoin as fundamentally different than the rest of the crypto world, and something that has staying power and is really like philosophically aligned with the way that we see the world and the way that we see the world going. And so it doesn't make sense for us, in our view, to focus or disperse our focus across all these other assets. Let's focus on the thing that's going to have the biggest impact in the world, the thing that has the largest TAM over the course of the next 10, 20, 50 years, and grow the business in that more focused way.
Yeah, that makes sense. Now, you mentioned that you no longer do consumer loans, you only do business loans. Kind of what's the thesis behind that, and what purposes have you seen businesses use this cash flow management solution?
Yeah, so as I said, we do commercial loans for business or investment purposes.
Yeah.
And so if you've got a business account with us, you've onboarded an LLC or some other type of business entity, you can borrow 50% loan to value against the value of the Bitcoin for business or investment purposes. That's a pretty broad brush, right? Yeah. Some people are buying more Bitcoin with the loan and taking kind of a levered position there. It's an investment. Some people are buying real estate. Some people are have actual operating businesses where they are using that capital to purchase inventory, get through like busy seasons for seasonal businesses, bridge financing. A lot of real estate investors find this very interesting tool to purchase real estate and close very quickly with cash, and then go through the bank financing process after they've been able to move very quickly on making that purchase for the real estate, because as we all know, if you go directly to a bank for bank financing on a commercial piece of real estate, it's going to take 3 months at least to go through that underwriting process, and it's a ton of paperwork and it's a headache. Whereas you can come to Unchained and be funded in, call it 3 to 5 business days, take that capital, purchase the property with cash, and then go through that refinancing process in the timeline that it gets. Why did we move away from consumer loans? We looked at our loan book, and the majority of it was coming from the commercial side, the business side of things. And so similar to the way that we were just talking about our focus on Bitcoin as opposed to the larger crypto ecosystem, there's an operational consideration to say, hey, if the majority of the business that we're doing is coming from this anyway, and having a lot, like a much larger in terms of count of loans on the personal side that are very small, the same operational burden exists for that small $10,000 loan as it does for a $150,000 or a $500,000 or a $3 million or $20 million loan on our side. And so it really was just a business decision on highest and best use of capital for Unchained and looking at the way that we approach the market. With AI automation, maybe y'all will go back into retail, but who knows? Who knows? Yeah. Hard for me to speculate exactly how we will see things going and decide to react to it. No plans at the moment that I'm aware of. Yeah. But yeah, I mean, I could definitely see that happening potentially in the future.
And then for businesses that are taking on this financing, kind of generally, what are the terms? Is it like a 1-year term loan, and what kind of range of interest rates should they expect?
Yeah, so we have this collaborative custody model, and there's a 2% origination fee. There's a 12% interest rate on it. It's 50% loan to value, and we have a $150,000 minimum. So the APR on that total loan is 14.18%. It is 360-day term loan, and they're interest-only payments on a monthly basis. So every 30 days, we're drafting that interest payment from the business bank account that's connected to that loan, and then or to that business account, And then at the end of the loan term is when the principal is due. A lot of our clients will choose to refinance that and just roll it into a new loan and start that process all over again. So that's the general terms that are on those loans.
And then the underwriting process, it's just how much Bitcoin do you post as collateral? It's
Basically,
not going through your income statement and all of that.
Yeah, that's right. So you're onboarding an entity, and so there's KYC associated with the entity there, of course. We're making sure there's no liens on the business that would otherwise encumber the Bitcoin that's being used as collateral. But as long as that stuff checks out, then there's no personal underwriting that's happening there.
That's interesting. And has this been for private businesses, or have you even seen public companies use this product?
Yeah, absolutely. We work with a range of business clients, anywhere from high net worth individual with an investment LLC that he's using to manage wealth, all the way up to large corporations and public companies. Our client base tends to skew into that call it small to medium sized business or high net worth individual with the LLCs. But we do have some large corporate and public company clients. And of course, the purpose of those loans varies based on the profile of that client. So a larger company is typically using those to actually fund operational things or investments in perhaps real estate or other business lines. And then those people who are more using entities to manage their wealth for whatever reasons they're working with their estate planners or tax planners on, they might be using those for taking a levered position on Bitcoin or buying some other assets as well as a diversification play.
Really interesting.
Yeah.
So now if you're 50% LTV, Bitcoin price is now down 50% from the all-time high.
Yeah.
That all-time high was for one day, right? 124,000, I think. So, as the lender, does that make y'all nervous? What processes do you have in place to manage that risk?
Yeah. So one thing that maybe I should have mentioned before is that Unchained has been in operation, as I mentioned, doing Bitcoin-backed loans since 2017. We've had 0 loan losses for the capital providers on these loans. That starts with a conservative way of approaching things. 50% LTV is actually very conservative. It used to be 40%, and as the market evolves and we expect Bitcoin's volatility to shrink a little bit, right? You can kind of change the way that you approach that market, but it's still very conservative at 50% loan to value. We're extremely high touch with our clients. And so if you've got a loan with Unchained and the price drops 25%, you're going to be in a position where we're asking for some action from you. But well before we get there, we're on the phone, we're proactively communicating to make sure that our clients understand the situation at hand, that they understand their options, they know what the process looks like for sending in more collateral to kind of bring that. The way we think about it is collateral to principal ratio. So at 50% LTV, you're starting at 200% collateral value versus the principal. And when that violation of this CTP ratio happens, and we're asking for more collateral or some other action, we're asking them to bring it back up to that 200% collateral value versus the principal. On the weekends, that might mean only being able to send Bitcoin because the fiat financial system doesn't work on the weekends, right?
Yeah.
And so this collaborative manner that we deal with our clients across all of these financial services that we offer really shines in these loan scenarios where we're on the phone and just making sure that people understand what they need to do to protect the loan that they've got, perhaps pay it down, perhaps recollateralize it, or whatever they choose to do with that.
Yeah, that makes sense. And if things get really hairy, then there needs to be a liquidation of sorts of the collateral.
Yeah, if the client is unresponsive, or there's just drastic drawdown without that action that we're asking for within the specified time period, then we can take steps to liquidate the loan. That's just part of the loan agreement there. Unchained is holding a second key as part of that collaborative custody model, and then we work with a banking partner who holds that third key as a key agent there. And so, the loan agreement is stipulating the terms with which we can take steps to liquidate either in default of the loan or these types of collateral action type situations. Up until that point, the client is kind of in full control of this loan. The title stays with that entity, and it's only under those specified circumstances that we're able legally to take any action to move the Bitcoin to sell it down to cover the principal on the loan.
Right. Yeah, that makes sense. And so now let's zoom out and look at here at Bitcoin. Some people say they're disappointed by the previous bull market and even the one before that, for that matter. And here we are now, seemingly in a bear market. What do you think is going on? Is the fundamental thesis for Bitcoin changed?
I don't think so. I don't know what's going on, if I'm being perfectly honest. I think a lot of people are kind of befuddled at the bifurcation of the market, so to speak, with Bitcoin seemingly stronger than ever from a fundamental standpoint, with the support from the administration, with the Bitcoin treasury companies and strategy and the ETFs and all the other institutional demand that we've seen, with the mindshare expansion for what Bitcoin is and the fact that it's here to stay. I mean, there has absolutely been a phase shift of people looking at Bitcoin skeptically and just saying, like, I don't even understand at all what this is, to now, like, at least in my friend group and the people that I talk to, everybody knows what Bitcoin is. Nobody thinks it's like going away tomorrow. Right. There's a phase shift in the mass understanding of Bitcoin as something that is here to stay. Gold has been screaming higher, silver doing similar types of things. The debt continues to explode, deficits continue to explode. All of those macro factors seem like they should be extremely bullish for Bitcoin, and I think they still are on a very long time horizon. But I think there's a lot of very intricate operations under the hood of this macro economy that is causing the market to look at it as, well, one, still a risk asset, and so we need to sell that. I think there's some of the AI trade that's pulling capital away. And I think that gold is sending some type of warning signal, that nobody quite understands exactly what's happening there, but we can definitely see a phase shift. It's not normal for gold to do what it's been doing, right? And central banks have been buying and that kind of thing. So I imagine we will look back a couple of years from now and be like, oh yeah, well, that's what was happening. I know there's this thesis about OG Bitcoiners selling their stack as it reached 100,000. I think that seems to be some truth to that. But it's just this like broad mix of things that's very difficult to pinpoint any particular reason as to why the Bitcoin price has done what it's done. That said, if you are kind of early in your Bitcoin journey and you're taking a long-term 10-year, 20-year time horizon, I mean, this is a blessing, right? Like for the people who may be later in their years or their careers and were looking to retire, at $126,000 Bitcoin, this is a little bit tough, right? You've got that sequence of withdrawal risk. But for anybody who is trying to build their stack, like in my mind, look at this as a blessing because I kind of didn't think that we'd have this opportunity again. I'm glad to be proven wrong on that.
Unchained has done some great research on HODL waves. Do you want to explain kind of what HODL waves are and how they were able to get visibility on that?
Yeah, well, HODL waves is a visualization of the data that is in the blockchain as to when Bitcoin moves. So as you're aware, as the audience may be aware, everything that's happening on the blockchain is very visible, right? Anybody can run a node, can pull data from that node and see the time, the date, the exact moment when Bitcoin moved or last moved. And that actually provides some very interesting information if you map that time frame to a particular price. And so the HODL waves shows the distribution of when Bitcoin last moved across the entirety of the supply. And so you can start to see patterns of Bitcoin that hadn't moved for 10 years versus 5 years versus 6 months and see what that distribution of ownership actually looks like based off of the distribution of when that Bitcoin moved. So we can start to see, the Bitcoin that hadn't moved for 10 plus years, we're seeing a lot of that start to move. And the inference there is that, these OG Bitcoiners that have had Bitcoin there, that they were just sitting in cold storage, are now taking profits potentially. They're moving it into exchanges to sell it and take some of that profits. And so is it an exact science? No. It's a data science, and you can kind of start to glean and make inferences as to what's going on under the hood by looking at the data there. And yeah, Unchained kind of was one of the pioneers around looking at this data and providing some really great visualizations there. You can go for the audience to our website and just search for HODL waves, and you should be able to see that. We also have something called HODL caves, which is more of a price distribution visualization. I won't go into the details here on that, but that's definitely really cool as well. You should check it out.
Yeah, excellent. Well, I always like a good chart, so I'm grateful for Unchained putting that together.
Yeah. I think the Bitcoin community, generally speaking, loves data and charts and stuff. It makes us feel good about our thesis, whether there's chart crimes happening or not. So you got to be careful what you look at.
Yeah, absolutely. And so, when you mentioned the kind of one of the theses behind Bitcoin-backed lending is so that you don't have to sell the Bitcoin. If it's true that you've got OG whales that are selling, is it because the amount of financing that they would want is just far too great, or that they just want to take some chips off the table and rebalance, as we say in the financial industry?
Well, everybody's got different financial situations that they are working with, right? And I think, generally speaking, Bitcoin-backed loans are scary to a lot of people. A lot of people don't like any debt at all, which is perfectly reasonable, right? When you enter into a Bitcoin-backed loan, you kind of are already selling that Bitcoin, but there's a whole lot of variables that go into that calculus, which is that you don't know when you're going to sell it. You don't necessarily know at what price you're going to sell it. And
you're going to need cash to pay the interest anyway.
You need cash to pay the interest. So it's kind of like a forward sale of the Bitcoin with all these unknown variables happening. And you can, a lot of people take this approach of, I'm going to borrow against the value of the Bitcoin, and I'm going to refinance, into perpetuity, and I'm going to let Bitcoin's natural price appreciation take care of the principal on that loan over a long period of time. And it just gets easier and easier to pay off that principal. But ultimately, in order to close out that loan, some amount of capital has to come from somewhere in order to pay down that principal. It works the same way in mortgage land, right? People buy homes and they finance those homes, and they kind of expect that the depreciation of the dollar is going to help make that debt easier to pay off over the long term, and that the appreciation of their house is going to also help them be able to pay off that debt over the long term as they are, looking at the value of that home relative to the outstanding debt.
And do you think that commercial banks that originate mortgages, are they going to start originating Bitcoin-backed loans, or is that not on their radar?
I think it's on their radar. I think a lot of people expect that they will. I worked at banks for a very long time. I pitched Bitcoin-backed loans back in 2020 and was essentially, not actually laughed out of the room, but it was not at all taken seriously. I think we are in a different market environment and understanding of Bitcoin, as we were talking about before. So will banks lend against Bitcoin? I think for maybe their private wealth type clients who are looking for that type of asset-backed lending, that's a possibility. Are they going to start lending against Bitcoin more broadly in consumer banking? I have my doubts. And if they do, it's going to be a while.
Right, yeah. And now I've also heard people say that they like the ETFs because then they can do a margin loan against the ETFs. And so how do you see the trade-offs between that? Obviously you lose the sovereignty. Are the loan terms different and kind of the mechanics of that?
Yeah, it varies from broker to broker. The margin requirements for any kind of equity-backed financing that you might be doing is going to vary from broker to broker. And we've seen actually people who were borrowing against the value of their MSTR stock. I know you're asking about the ETF, but this
Bitcoin
is
proxy,
a Bitcoin proxy where these brokerage firms would just kind of overnight change the margin requirements to be extremely, a huge penalty on it. It's like making that trade all of a sudden be very much unaffordable. And disadvantageous to doing it, and basically forcing them to sell and liquidate that position in order to cover the margin requirements. And so that is one thing to keep in mind, is that, as the understanding of Bitcoin as an asset, generally speaking, is still in its infancy within a lot of these banking institutions and brokerage firms, they may choose to take some kind of drastic action that is adverse to you if they feel like they're out over their skis a little bit too much looking at the market. And there's nothing you can really do about that, right? You just have to be aware of this as a possibility.
I'm assuming Unchained doesn't change the LTV requirement during the life of the loan.
It's a term loan.
Yeah.
And so that LTV requirement and all of that is built into the term of the loan. So no, we can't just jack that up or down or whatever during the life of the loan. That doesn't mean that we couldn't change our LTV requirements
when you're refinancing
a new loan and all of that. So, again, this is a financial contract, and to understand what's going on under the hood and ask those questions, and we're more than happy to help dig into those details. But no, we can't. It's not a margin loan, right? In the same way that we're talking about with the ETFs or with any other stock that you might have in a brokerage account.
Yeah, that's really interesting. I had heard about that kind of rugging of stock-based lending.
And rest assured, these banking institutions and brokerage firms have a lot of information at their disposal. They can see what's happening in the market, right? And they can they've got a broad client base with which they're trying to support. And so you may or may not be in a position to be able to dictate terms with them. Odds are you probably aren't, right? So you just got to take that into account.
Yeah. Now, we've seen a lot of Bitcoin custodians go down the route of becoming a bank. And is that something that is on like Unchained's roadmap, or is that just a different segment of the industry?
I think it could be on the roadmap. I'm not aware of any, active considerations in that regard. Obviously, there's a very rigorous process, and it introduces a whole lot of other dynamics when it comes to like the compliance and regulatory infrastructure for which Unchained is regulated and that kind of thing. So, is that a possibility? I would say, sure, it's a possibility. Is it something that we're actively pursuing? Not at this time, but who knows how things will shape up. I think it's interesting that a lot of these exchanges and other places are doing that. I mean, and I kind of don't blame them, right? Like, banking has its privileges. You get to print your own money. We've talked a lot about the loan book. The cost of capital for a non-bank is much higher than a bank, because a bank gets to print its own money when it's issuing that loan. We can't do that, right? We have to go out and source capital from investors who understand Bitcoin well enough to know that it is a pristine collateral asset that is very well, a great instrument to back these types of loans, but they don't understand Bitcoin quite well enough to know that they should just be buying Bitcoin with that cash. I say that in jest, right? But but there is kind of like a sweet spot there of people who have capital available and they want some higher returns with an asset that they understand to varying degrees. And I think that's continuing to mature.
Yeah, and it brings up a really interesting topic of kind of the volatility of Bitcoin, where it seems like now with the advent of, for example, the perpetual preferreds that Strategy is offering, that there is this bifurcation of, do you want to earn 10, 12% in terms of dollars in a psychologically safe manner? Or do you want to embrace Bitcoin's volatility and also have kind of that asymmetric upside that comes with that? How do you think through that? Is it about what age you are or how well you understand Bitcoin?
Yeah. So I, as a kind of personal project, have a newsletter called Fire BTC, and I talk a lot about financial independence and retiring early and using Bitcoin as kind of the core asset there. It depends on where you're coming from and what you're comparing it to. In my personal view, I don't want to sacrifice like long-term total return for income in the here and now. I'm perfectly fine with that volatility, and the way that I think about it, personally speaking, is that volatility is solved, so to speak, by just having a larger amount of assets.
Right.
You know, if let's go like way out on the hypothetical, if you're sitting on $1 billion and it goes from $1 billion to 500 million, you know, like for me, that's probably okay. I'm okay with that result if I still have $500 million worth of any assets, right? So that's obviously like an extreme example, but that's how I think about it. A lot of people don't want to take that volatility, don't necessarily understand the long-term prospects of Bitcoin in the way that I think I do. And if you're comparing something like Stretch, which is paying 11 and a quarter in this past month, to something like the S&P, well, the S&P 500 has, in the last 20 years, had an average growth rate of around 10%. And so, but you also have to deal with the volatility and the market dynamics of that index over that period of time to get that 10%. If you can be confident in the structure of Stretch, of STRC, and you feel confident enough that it's going to be around in 10, 20 years and that it will continue to pay a dividend in that similar type of range, why wouldn't you consider that for at least a portion of your portfolio? Why would you take on the volatility of the S&P 500 for a similar return if you could have the same return without that volatility there? So it's a calculus question, right? Of what am I comparing this to? Everything has a trade-off. Everything has like a hurdle rate for the value of the investment that you are considering versus whatever other options are out there. So that's how I tend to think about things.
And I've talked with people who have like cognitive biases where they'll look at the Bitcoin chart and they'll be like, I'm going to wait for it to go down before I buy it. And then it doesn't go down as much as they want to, or they forget about it and then they never buy it, right?
Or they're watching it. They see it go down.
But then they get scared.
But then they get scared, right? Because it's gone from 126,000 to 60,000. Well, of course it's going to go lower. It's going to go to 40 or 30,000. I'll buy it there. And then if it were to get down there, they wouldn't buy it then because then it'll be going to 20 or 15. Like it's tale as old as time. 100%.
And so it seems like the Stretch is like a hack to get around this cognitive bias. It's almost like people are financially punishing themselves long term because they have that kind of wrong intuition about looking at the chart instead of looking at the fundamentals, which have never been better.
I like Stretch. I own a little bit of it, just as a disclosure, I guess. Most people don't know it even exists, right? And so, like, if you think about the normal person out there who's considering their options, they know Bitcoin exists. They don't even know strategy is a thing, probably, right? And they definitely don't know about the suite or menu of preferred equities that have been issued and understand the inner workings of STRC. So, it's a 6-month-old or less product at this point. Over time, I think like things as they are seasoned tend to obviously have a little more surface area for the people who are knowing about them and then being able to take that into their calculation of what they're looking at, right? So, and it also, of course, gives confidence in the ability for STRC to stick around and people to see, oh yeah, this is now operated for a year, 2 years, 3 years, 5 years, and been able to consistently be able to pay out these dividends despite the various fluctuations in the Bitcoin market and what people think in their minds would be affecting their ability to pay those.
Now, I do find it interesting that the dividend rate and the interest rate on Bitcoin-backed loans, they're like in the same ballpark, right? Of let's say 10 to 12%. Do you think that those are both going to go down as more capital finds its way into the Bitcoin ecosystem?
I think it's logical to expect that it would.
Yeah.
We were talking about banks coming in and providing capital for this. We're definitely seeing some of that and having some of those conversations. As banks come in with lower cost of capital because they can print their own money, it's going to drive rates lower, right?
So mortgage rates today are like 5%, 6%?
Yeah. They've been 15% in the past, right?
Yeah.
And they've been, 2 3/4 as well. So
now, granted, they have a government guarantee.
Yeah.
I don't think we'll get like 90% LTV on Bitcoin with a government guarantee anytime soon.
yeah, the mortgage market is very interesting because it has so much, you're saying guarantee, and that's part of it, but there's just a whole infrastructure of government support that goes into the market for mortgages. And it's just such an old and established market as well that people understand. And Bitcoin is 16 years old. Bitcoin-backed lending is half of that, basically. And again, like there is an education process that comes into play when you're talking to capital providers who are looking at various investments on their menu that they could be putting their dollars to work at. And it takes some time for them to understand Bitcoin and why it is such a good collateral asset, especially when you're doing it at 50% loan to value in the way that most people do.
And now another topic I've heard people bring up with Bitcoin-backed lending is like these DeFi platforms. Like I've heard the name Morpho thrown around of, you can just use that instead of using a traditional Bitcoin lender. How do y'all position Unchained relative to kind of that ecosystem?
Yeah, it's fundamentally different, right? The way that we're doing it is very straightforward. You're providing your collateral into a Bitcoin address where you control a key and you can see it and verify what's going on there. You don't need to understand the code of what's going on underneath the hood there. If you start to play around with some of these DeFi protocols for Bitcoin lending or whatever, you've got to understand what that contract looks like. And you've got to be very confident that the way that it is structured does not have some type of bug or backdoor in it that might cause you to lose that collateral, despite the fact that you are in good standing with the loan contract as it states. So, I don't think I guess in some ways we're competing with that. I don't think that people, for the most part, are really going down that lane to look for Bitcoin-backed financing in the way that I think a lot of people kind of expected that market to develop. And there's just been so much craziness going on in the crypto world over the last few years that I think people take a very rightfully skeptical eye to those options.
Because as you mentioned with Unchained, it's like human high touch. With these DeFi protocols, it's all automated, but you don't know exactly how it's automated.
Exactly.
And when something goes wrong, who do you go to?
It's sold as open and transparent, but unless you've got very specialized expertise in understanding exactly how those contracts are formed and are operating, it's still a black box to you. It's just that now all of a sudden you've got a whole host of unquantifiable and unseeable risks that are out there for that collateral. So, I walked you through the terms on our loans. They're more expensive than a lot of the other options out there, but that's because we're providing a fundamentally better security for the collateral that underlies those loans. And most of our clients, they come to us because they care very much about the custody aspect of this whole thing. It's like, I'm okay paying 100 basis points more for this Bitcoin-backed loan if I can get much better assurance that the Bitcoin is actually where I expect it to be.
Yeah. Now, earlier you mentioned FIRE, financial independence, retire early. Historically, what I've seen from that community is that they're very skeptical of Bitcoin.
Yeah, they still are.
They still are, okay. What do you think that's about?
So a lot of the, call it FIRE influencers.
Well, do you want to explain what FIRE is?
Yeah, sure. So financial independence, retire early. It's a way of approaching personal finance that kind of looks at the world as there is a way to be very intentional about your spending, maximize the savings rate that you have, and then plow all of that extra savings into assets that are growing and compounding in a way that can help you build a portfolio to fund your lifestyle and your expenses. And there was
before you hit 80.
Before you hit 65, which is the traditional retirement age.
Oh,
and so
for me it's 80, but
for you it's 80. For different strokes for different folks, right? People think about like the normal career is you grow up, you go to college, you get a job, you work 40 years, you retire at 65 with a pension or something like that. The FIRE community looks at this and says, well, that's not the only way to approach this. I could actually bring that retirement age much closer to the present if I'm very intentional about maximizing my savings, and if I'm taking that savings and investing it in the S&P 500 is kind of like the preferred choice, or broad stock market indexes, and having that compounding happen such that the portfolio grows to a level where you can peel off a small portion of it. You can sell down a small portion of it every year to cover the expenses that you have. There was a study called the Trinity study back in the 90s that looked at over 100 years of stock and bond market information and did a whole bunch of data testing, data analytic type testing on portfolio allocations to see, okay, what is the actual safe withdrawal rate over a 30-year period that would allow you to never run out of money, basically, in retirement if you're just living off of those drawdowns. And the end result of that study was what's called the 4% rule. And it basically states that if you reach 25 times your expenses and you draw down 4% of your portfolio every single year to cover those expenses, in almost all cases, looking at historical market behavior, you will not run out of money after 30 years. And in fact, in most cases, you end up with far greater amounts of money because of that compounding effect. Why look at that and say, stocks are great. I love this FIRE methodology.
Saving is good.
Saving is good, but Bitcoin is better, right? Bitcoin has a higher compound annual growth rate, at least over a long period of time, we expect. And it provides extra benefits beyond just this like traditional view of financial independence, which is that you can actually own your money and control it directly and not be at risk of the brokerage account that you're using being shut off and access to you. It's more widely available across the world, right? Like the FIRE community typically takes a very US-centric view on things. Most of the kind of influencers in that space are from the US, but the rest of the world doesn't necessarily have access to the S&P 500 or to any stock market at all. And but they do have access to Bitcoin as long as they've got an internet connection, right?
Yeah.
And so it's a much more, it's a better asset for the pursuit of FIRE in a lot of different ways. And during my time, my Bitcoin journey and my FIRE journey, those two things kind of came together for me. I was pursuing the FIRE thing, using stocks. Once I became convicted in Bitcoin back in those like early days of 2017, 2018, it was like, well, I want to buy this for my FIRE strategy. And I just kind of like 100% shifted the future allocations that I had toward that Bitcoin lens to bring that in there. So that's what I'm writing about on the in the newsletter, is like, how do you take this FIRE methodology, this FIRE approach, and incorporate Bitcoin into it? And what are the different intricacies with which you should be thinking about that using Bitcoin versus like the traditional way of doing that? Why did the FIRE influencers hate Bitcoin? So the very first newsletter that I wrote is called Why Bitcoin is Stupid. And it's a play on one of these influencers. His name is Mr. Money Mustache, is what his handle goes by. And he wrote this blog article back in 2018 when Bitcoin was around $14,000 after it had that blow off top. And it was called Why Bitcoin is Stupid. And it was all the same FUD and whatever. And Beanie Babies and Tulip Mania and all this stuff that we've heard a million times. It's very difficult to make those types of calls publicly and then come back around and be like, oh guys, I was wrong. Bitcoin just went from 14,000 to 126,000. Like maybe there's something that I missed here. It's very difficult for anybody to do that in a public way. And I think, it's the rest of the FIRE community, like a lot of places, they look at those intellectual leaders as people that they should follow, and that permeates out there. So there's still a lot of skepticism in the traditional FIRE movement. I think that's broadening out. I've certainly seen that since I've started working on this content and doing this over the last year and a half or so. But ultimately, I don't really focus on that community as much as I focus on Bitcoiners who can also learn a lot about the pursuit of financial independence and having a very intentional plan for how they manage their personal finances and approach that from like a family decision standpoint.
So today, a lot of people, even who have a high income, are living paycheck to paycheck.
Yeah.
And so, as we wrap it up here, I want to hear kind of how you think about what it means to be intentional about your spending so that you're not paycheck to paycheck and you are accumulating Bitcoin.
Yeah, it's very easy to waste money on all kinds of frivolous things that don't actually provide value to you in your day-to-day life. And sometimes these things like just stack up and you don't even notice them, right? Like the kind of perpetual example is the subscriptions things that you signed up for. You signed up for the free trial, and then 2 years later, exactly. 2 years later, you forgot to cancel it, and it's still just stacking up, and you've got like 10 of these things. So it always starts with spending, because that's the thing that you can control very intentionally and actually has a very compounded effect on the amount of money that you actually need to retire. If we're talking about this 4% rule and using that as the metric, what that means is that every dollar that you cut out of your expenses is $25 less that you have to save in order to reach that retirement. So that actually, it has a very meaningful impact on your ability to reach financial independence at a much earlier age. And then the other side of things is like, over time, your income should naturally go up, and you can take active steps to provide more value to the world, bring in more income, and if you are very intentional about your spending and how you're approaching that, you can widen that gap of your income versus your spending. You can increase that savings rate, and then have a plan, have intention about taking that extra savings and buying these assets like Bitcoin, like stocks, or whatever your asset of choice is, so that you can get that compounding engine working for you early in life. The earlier you start, the longer you do this, the faster that grows for you, and the sooner you can get to that place of financial independence. And that may not mean like retiring and going to play golf every single day, which sounds great to me for a little while. A lot of people would get bored there. Yeah. But what it does enable is optionality for how you spend your time, what you work on, the passions that you have, the businesses that you'd like to build, the travel that you'd like to do, spending time with your kids when they're young, all of these things that people like think about in different ways. But the key point is get to a place where you're in strong financial standing, where you've got control of your expenses, where you're widening that gap and increasing your savings rate, and put that optionality in front of you, so that if you do come to a place where you hate your job, you hate your job, and your boss is terrible, you can just walk in and tell them, I'm done.
Or AI takes over your job.
Or AI takes over. That's very likely.
One, but
very likely.
Yeah, very likely. All right. Well, Trey, on that note, it was really wonderful to have you on the Bitcoin for Corporations show.
Loved it. Thanks for having me.
Look forward to having you back on at a future point.
Anytime. Anytime.
It was really great to learn about what Unchained is doing and hear all of your insights. So thanks for coming on.
Very good. Thanks a lot, Pierre.
And if you enjoyed this episode, join us for the next one by subscribing on YouTube and also sharing it with your coworkers, friends, family, enemies as well, right? Love your enemies. And follow us on X at Bitcoin for Quartz. Thanks you again for joining us, and looking forward to the next episode.